Hey traders, Steven here with thetradersplan.com. It is Wednesday, October the 16th. We're going to get into the overall market. I think we are headed into an uptrend, but we'll keep an eye on that. We'll look at the market breadth and some individual sectors. We'll kind of see where the money is flowing. So I want to get right into it, and I want to look at the Nasdaq chart. The last time that I recorded a webinar was last week, and there was this rejection bar right here. You can see, I always talk about the green line is the 20-day EMA, and you can see how many times that it finds rejection, it finds resistance at that line. Let me take this off. You can see right here, it got rejected, came back, got rejected again, came back, got rejected again, and then started bumping up against it, but didn't quite sell off. Now, I was talking about when the market was down here, it needs to clear this pivot right here, because the high right here is, it's above the 20 and above the 50. So the green line and the blue line right here, because we did find support. We got a reversal at the long-term moving average, check, right? We didn't undercut any of these lows. We did undercut this one, but we didn't undercut this one or undercut this one. So it came back, and then finally it busted through. Now, why I think this is important to look at and study, because a lot of times what happens is when you get several rejections at the 20-day EMA, at the declining, but yet it just keeps coming back, right? The bears cannot take charge. Like, yes, this is a correction, but it really is minor when you think about something over here, but it just keeps coming back. And then what happens is the price action, it really hugs the line, right? It's under it. It's it's what I call hugging the line. And a lot of times what that's telling me is that the bulls want to break through. And it seems like there is when I see this happen, a couple things have to happen. One, the price action just has to really be sitting right under it. Gets rejected a couple times and then just keep coming back right to this line. But also the declining 20 EMA, and it's kind of hard to see because there's a lot of price action and it's right on top of the 50, starts to curl, right? It starts to kind of flatten out, momentum slows to the downside, and then boom, you had a breakthrough, right? You had a gap up, plus you had a little follow through yesterday. So now what I think is clear to me is I believe, unless we get a tweet or something, I believe that the Nasdaq will gun for an all-time high. Usually what happens is you got these little levels right here, and the market is like a magnet, so it'll see these little levels and then it'll be attracted to it and it'll pick them off, right? Now, what you can make the argument is well, we made a high right here, we broke this level, but when we came back and bounced, we didn't clear that level. So you can always make the bearish case, but I'm still looking at the glass half full. We are still in a trading range, but I think we're headed towards an all-time high unless we just get, slammed down again. So you have to be cautious, but right now, I think, with the way the market breadth is looking at, and this could change in one day is where the price action could change my tone from a bullish tone to a bearish tone. But I think you want to be buying stocks because we broke through, we followed through, we reversed bullishly right here, broke through, followed through. The 50 and 20 EMA moving average lines are curling up, okay? So I think this price action right here so far is bullish, and you just have to keep an eye on it. Now, if we want to kind of look at a longer term chart, I think it's always important to sometimes look at a long term chart just so you can see really what happens. And I want to look at this 2015, 2016 double dip correction, just because I think the market, what happened is very similar, even though we had a much worse bear market, right? But you had kind of a nice uptrend, an inverse head and shoulders, right? But as it was coming out of this, last leg, you get, a shakeout right here, and then you get a reversing candle, and then you get a shakeout right here, and then you get a nice little run, okay? Now, I think it just looks similar, right? Because you kind of got that inverse head and shoulder. Now it's wider and it's looser. But then you got, right, a shakeout right here, a shakeout right here, and a lot of times just when the market is trying to come out of a very frustrating time, being in the fourth quarter of last year, and this is a very long-term chart, it can take time, right? Or it can try to shake you out, or the bears can continue to try to slam the price action to make it go down the second leg. Okay, so at the end of the day, I just look at this and say, okay, I'm seeing some reversing candles in the last few weeks, right? I think right now you just have to stay bullish. And by the way, how bearish can you be when we're 2% away from an all-time high? Okay. Now we do have the election coming up a year from now, and yes, I do think that is going to play a role one way or the other. I'm not going to get into it because I don't know what's going to happen, but I think if the market heads out of here and ignores all that stuff, we get a positive China news. If the economic data starts to get better, I think we're going to head out here, and we'll just deal with the election next year. We also got to keep in mind that historically, typically, the market is historically at the very end of the year is typically pretty positive. So even though I don't always play seasonalities, but I think it's important that there tends to be a lot of window dressing towards the end of the year. Now, if I look at the short-term breath, I got to make the bullish case, because now you have 70% of stocks in the S&P 500 are above their 20-day EMA. It's hard to be bearish, right? So I think that's a check mark in the bull camp. Then you got technology, all financials, discretionary. So you got everything that's really looking strong. Staples is starting to look weak. Not a bad thing, because those are defensive. Energy is still really weak. And utilities, was looking pretty strong, is now starting to weaken, right? And a lot of times this has to deal with the fact that, bond yields are bouncing, which is negative for bond prices, and bond prices are positively correlated with utilities and REITs, okay? So bond prices are falling, utilities and REITs typically will follow suit. So that looks pretty good, right? And then if we go to kind of a bigger picture market breadth, where is that? Kind of the longer term, which is what I prefer, 67% of stocks in the S&P 500 are above their 200-day moving average. Looks good to me. Yes, this has kind of been a choppy year, but when you're coming out of this, I think that's when you want to be long and just kind of see how long. You never know how long it can last, right? Trend following 101. You just play the trend. Could be a couple days, could be a couple of years. You don't know, right? And I know it's hard to think it could be a couple of years or even a few months, given the news kind of environment that we're in. But man, that can happen, right? So let's look at, so we looked at breadth. There's one thing I also want to show you, and so we looked at that. We can close that. So there's one thing I want to show you, and that's the Shanghai exchange. And why I think this is kind of interesting is because, right, this still could be a counter trend rally. We had this roaring bull market, or Shanghai did, and really hasn't even hit the 2015 high, and this is 4.5 years later. But we have a surge off the bottom, right? It's almost like a thrust, right? It could be a breath thrust. And then it looks like little mini head and shoulders, right? You can call it whatever you want. Either way, we got a neckline right here. This could roll over, this could break out. If it breaks out this way, I have to believe that we're going to break this, and then could break this. So it just kind of keep in mind that a lot of these Chinese stocks, or even if you're looking at a China ETF like FXI, a lot of them, have really taken it on the chin the last couple of years. They really surged at the beginning of the year off the bottom with everything else, major move, and have not really cleared these pivots right here. So I would just keep an eye if you're looking for some opportunity. Keep an eye on some China ETFs that are looking similar to this chart. Not all of them are the same. Looking similar to this chart, and just keep an eye out for this, because if it breaks this neckline, wouldn't be a bad entry or something to consider with a stop under this most recent swing low, right? You're not risking a whole lot right there. But we'll just kind of keep an eye on it. Just always looking for opportunities. But right now, I wouldn't jump the gun on this. I would just keep an eye on it. So let me refresh this. In the last 1 week, it looks like the financial sector is leading, which makes sense because yields are bouncing. We'll look at that here in a second. Industrial communication. But this is also what you want to see, right? The market's been up, and the REITs, the staples, the utilities, all the defensive sectors in nature, they're all down. Energy is still not strong. It just is not a strong sector. It hasn't been a strong sector for a while, right? Scooter ranking is 3.3. It's the lowest 12-month technical ranking out of all these ETFs. So there's just better stuff out there, right? Why are you going to buy something that's just been beaten up for 2 years? I mean, who knows when it's going to bounce? Because, I mean, if I look at an oil chart, I'm going to say oil is going down versus going up. But financials are leading, so we can look at that here in a second. But before I do that, let's look at a price of the Treasury yield and Treasury bonds. So, you know, you have this massive sell-off in yields. This is the 10-year Treasury yield. And then if we look over here in this little thumbnail right here, you can see that you just had a dead cat bounce off the bottom, and then it really came back down, and it's surging off the bottom again. And if this surges out of here, which I don't think is going to be a straight up shot, but if this surges out of here, that's going to be positive for financials. It's going to be positive for your banks. It's going to be positive for your brokers, all that stuff, insurance companies. As you can see right here, the movement in yields are very positively correlated with financials. Okay, so it's very, very oversold. Now, this is a very, very long-term chart, but if we get out of here, or if it just even starts to grind higher, I think financials are going higher with it, which makes the sense that the XLF is leading, at least in the last week. On the flip side, it's negatively correlated with utilities. Okay, so if yields are going to bounce, bond prices are going to go down, utilities are going to go down with it. So if we look at the bond prices, where is that TLT? So on the flip side, so yields and bond prices are inversely correlated. One moves, the other moves in the opposite direction, right? So you have right here, and it makes sense that yields, I mean, I could flip this chart upside down and it would look like the Treasury yields, right? Because Treasury yields has kind of a double bottom. This really has a double top, right? Even though it hasn't cleared the pivot yet. But this sucker, to me, doesn't look like it's going up. Doesn't mean it couldn't, but I think this is going to grind lower for a while because, I mean, you had a TLT ETF that went from 110 to 147. The trajectory on this ascent is incredibly steep. So it needs a breather. I don't know how long of a breather, but I mean, bonds, a lot of times people think bonds are safe. Yeah, but man, this, in my opinion, this probably isn't the time to load up on bonds. But that's just my opinion. I think bonds are going to go down for a little bit. So, and as I talked about, utilities are highly correlated with TLT. REITs are highly correlated with TLT. So if these do follow, it's going to likely push REITs and utilities down, right? So just kind of keep an eye on that. So if we go back to the sector analysis and we look at this, but if we look in the last 1 month, you can see in the last 1 month, this is all the sector spider ETFs right here. There's 10 of them. Technology has been the strongest. I like to see that. Utilities and REITs are up there, but we have had a challenging month. If we look at, and then you can see the energy sector, nothing good is happening there. Nothing good. Could change next week. I don't know, but I think it's going to take more than a week to turn this thing around. So I'm focusing up here. And in the last 1 week, if we narrow it down even more, financials, industrials, communication, right? Financials are starting to really take charge. So we can look at that on an even deeper level and say, okay, I want to be in the last 1 week, just see where the money's flowing. And it's clear. You got the banks, the life insurance companies, just like I talked about. But this is the beautiful thing about being a retail investor, an individual investor. I don't have to buy the XLF. I can go out and buy a bank ETF because the XLF, let me go back one, XLF is up 3.74% in the last week. However, banks are up 5.38%, so a whole 1.5% higher. Right? You have the flexibility to dive deeper, so that you want the strongest industries and the strongest sectors. So let's just look for a minute and see what we find in this thing. So this is positive. When I'm digging into a industry, I like to see broad participation. I like to see a lot of green, right? And I see a lot of green. Now this is a large list, so there's going to be some red on the bottom, but that to me is showing strength right there. So let's look at some of these. See, these are some lower price ones. I'm just kind of curious. I want some of the higher price ones. So this BNPQY, BNP Paribas, this looks pretty thin. I'm not getting involved in that. I wish I had the volume on here, but I don't. So you see a lot of these South American banks are starting to pop a little bit. Wonder if we can get one with any volume in it. Nope, those are just traded too thin, but maybe there's something going on worth investigating, that some of these South American, or the Deutsche Bank, Barclays, all of these international banks, come to think about it, that's a very thin, only 30,000 shares a day. All these international banks are up a lot. So, and that's just something you find out. So Barclays, let me look at a weekly chart on this thing. I mean, this is interesting right here, although this isn't something that I want to get involved in, because, but you have some serious volume come into play, and I could draw a trend line right across here, and I would say this is breaking out relative to the S&P 500. A little bit of bottom fishing, kind of looks like, you see this double bottom, or you see some legs down, kind of looks like the chart of the treasury yields. Right? But it's starting to come out here. Let me look at this Deutsche Bank. Did I just look at that? Yeah, these are kind of ugly charts. These are definitely ugly charts. You can see that, yeah, it's just not something. But the interesting thing is it's slowing momentum to the downside. Look at this. This is really interesting, and this is a good case, good stock to look at. Look at this leg. Leg 1, leg 2 is shorter than leg 1. Leg 3 is shorter than leg 2. Now you have some sideways action. So when you're looking at a downtrend, I'm always going to look at what's the length of the leg. Are the legs getting shorter? That means the bears are getting tired, or the sellers are getting tired. Eventually this could turn around, so maybe it wouldn't be a bad idea to watch this, see if it breaks above this, right? You want it to clear some technical hurdles. Wonder if there's any U.S. banks. Bank of the Ozarks. I got that right down the street. Ozark Mountains. Let me look at the weekly chart. Yeah, I mean, this doesn't really look good technically speaking. So right now, based on what I'm seeing in the treasury yield chart and based on what I'm seeing in banks, I'm just not seeing a lot of good stuff that to me looks like it's absolutely turned the tide, because this is still in a downtrend. It's still below the 40-week moving average. It looks like it's trying to break out. Let me look at the KRE, which is a spider for regionals. Let me look at the weekly chart real quick. Still kind of in a massive trading range. Now, if we get going here, it could just blow through these levels right here, but that's why we do this. Like right now, I'm just looking at these and I'm like, I'm not really seeing a ton. You just try to investigate. You don't always know what you're investigating. Vertus Partners, and I'm just kind of looking at the scooter value right here. Let's go to Eaton Vance. That's kind of wide and loose. That's just not my kind of setup. Janus, I think it's another mutual fund company. If it's the same. Yeah, see, all these charts are wide and loose. So even though, from the chart, it's still in a downtrend. We go all the way back here and we're like, okay, banks are the strongest. But right now, as far as I'm concerned, it's just junk buying. And it just, it took me a couple minutes to kind of really go through that. But, the way I see that is, when that happens, just keep looking, right? Just the search continues. So now what we can do is we can go to the complete industry. Let me go to table view, right? And let me see what else is moving, okay? We just probably spent a few minutes on financials, and you can go in there and search for yourself, but the charts, I just think there's better stuff out there. Yeah, communication services, so this is internet. So I'm looking for some of these higher moved. Auto parts, automobiles, furnishings, consumer discretionary, so those are up a lot, so we might come back to that. Tires, more automobile stuff, even though that's in the consumer staples. Energy, coal is up a lot, but that's really the only thing up. Probably junk buying. Financials, we already looked at that. Healthcare providers, industrial suppliers. Look at this. I think we have a winner. And some metals. Let's keep going. Looking at utilities. I want to look at industrial suppliers because looking the last week. Now, sometimes when something is up that much, it might just be one or two stocks really moving the needle. But I know that some of these companies. So look at that. That probably moved the needle a little bit fast and all. It's a really nice bar right there. But it's extended, so I might wait for a retracement of that move. Let's see what else is up here. This is starting to move, although this is a pretty sloppy chart, right? It's just sloppy. And why do I say it's sloppy? One, I mean, it only trades 10,000 shares a day, but how can you really catch a trend when you're holding this? I mean, it goes from 40 to 33 to 43 to 30. I mean, I just think that's a hard thing to do. Plus, it's too thin. So, you do see some broad participation, but let me see. Look at this Granger. Yeah, another gap up right here. I wonder if they are absolutely related. I think this is a decent looking chart because right here you got this deep correction, right? Now it's climbing the right side and it's right across here. There's about some resistance at 315, but you can see it's really trying to climb out of here. So if it breaks above 315, I would say that's bullish, and you can just trail with the 10-week moving average, which you can see is right up here. Not a bad thing to look at. So you got industrial. Let's just keep going. Where did I see some? Got some tires, auto parts. I want to see what's going on here. That's a lot. Okay, that's a lot of green. So, never heard of this stock. Let's go look at it. A little bit volatile. I'm going to back it up on the weekly chart. Let me move the volume below, just so you can see this right here. Look at these skyscraper volume bars, right? I mean, that is some big buying right here. So something is happening. I'd have to look in the fundamentals, but Tenneco Automotive, I've never heard of it, but you know, it might go on the watch list because now I'm like, okay, you get this correction, you get some skyscraper volumes, got a pullback, and now it's looking like it's going to break this. Once it breaks that 470, I will take it seriously. Adient. This just looks like it's in a trading range. You can see right here, just kind of, I mean, it's kind of a bull trading range, but not really. That doesn't really excite me. I'll just kind of keep moving on. Trying to find one with a decent scooter ranking. That means it's not junk buying. This one is interesting, although it's, from the looks of it, I mean, it's just kind of a hard, it's a volatile play, right? And typically, I'll stay away from stocks like that. Like, when I can catch a move like this, I can sit through it. You know, if this pattern were over here, I might try to trade it. But now I'm looking at, there's a big difference from this trend right here, which is nice and smooth, to this trend right here. Even though it's surged from 60 to 90, you got a lot of tugging and pulling. And to me, that just adds extra risk. So I'm not so sure about that. Let's go look at some ETFs. This is my ETF list, about 245 ETFs. I just rank them by 3-month relative strength ratings. And why I do the 3-month is because I'm trying to catch any early trends if it's potentially going to be a turnaround. So a lot of times if you rank by 12 months technical rankings, then a lot of times it's already made a big move. So, but this Palladium ETF has been at the top of the list for a while now, and it just keeps going. I don't know what's going on here. I haven't read anything yet, but that's a major move, and you can see right here, I mean, this is huge, right? It made such a huge move, and then it had a nice cup with handle pattern, and never broke the black line, which is the 40-week long-term moving average, and then it's just 8 to 9 weeks straight up, right? So, you know, maybe you try to buy it on a pullback. Maybe you play the RSI 5 game with it. I don't know, but this does not seem to be correlated at all with the overall market. Shipping, I think we talked about that last week. It might err. I'm just going to look at the monthly chart real quick. Man, that's been down for a long time. The shipping industry has been down for a long time. I've been seeing some shipping stocks starting to move a little bit. You could draw a first stage base around this, or call that the neckline. It's right at it. So, I know those aren't perfectly horizontal, but I think you get the picture. So, you know, if this comes out of here, I would take the shipping very seriously. Home construction, we talked about that a couple weeks ago. This is just absolutely taking off. Home construction stocks are, due to the declining interest rate environment. Cocoa, that chart doesn't really look good. You know, I've been talking about Japan ETF has really outperformed in the last 3 months, because you can see some more Japan ETFs right here. You got the currency hedge, got Japan hedge small cap. You might want to go with this that's a little bit more liquid, but I mean, you can see right here, and this is the interesting thing, and this is why I like to look at this, because Japan still hasn't cleared its January 18 high. You can see like lower lows or lower highs, lower highs, lower highs. Now it's kind of coming across here, and it's really turning the corner. And you could catch an early trend. A lot of times, if you can catch an early trend, right, that's really the best leg of the move. So I think this is something to really keep an eye on right here. You can see it pulled back and reversed probably right there with the overall market, and now is outperforming the overall market on the way up, right? So Mexico, I haven't seen this here in a long time. So, and it could just be counter trend. I mean, right here, I'm just going to draw it right there. Could draw a little bit higher and go right here. Either way, in my opinion, it's still in a downtrend, but might be something to keep an eye on, because a lot of times when things underperform for a while, they can outperform for a while. Let's see this. Timber and Forest ETF. Yeah, this is also interesting because, again, you have something that peaked a long time ago, isn't anywhere close. But I think this is a perfect example of the golden cross, death cross rule. Like, you have something that crossed right here. You can see the orange line, which is a 10-week. It crossed above the 40-week, right? So then you buy, and you stay in it until you get the death cross, which is right here. I mean, that's a nice move. And then you sit in cash, and you sit in cash, and sit in cash. And you probably could have got sucked in on several rallies, but didn't, because you're playing the 10-week, and you just keep an eye on this. If that 10-week crosses back above the 40-week, maybe you get another move like this again, right? You just don't know, but I think that's a really good case study for the golden cross, and I think this one right here is too. You have the Pakistan ETF, and a few years ago, when this was probably somewhere around here, I thought this thing could go up a lot. Boy, was I wrong. But you know what? The great thing about it is it had its death cross. So I was like, forget about it. I forgot about it. And here we are over 2.5 years later. And, you know, if you would have bought and held this from up here, you'd still be in it. I mean, that thing crossed around $15, and now it's around $6. I mean, you'd be down 55, 60%. So when you have these long-term, if you have an idea, like a long-term theme, right? Whether it's artificial intelligence or weed stocks or Pakistan or whatever the case is, I just think it really helps to use the Golden Cross Death Cross rule, because when you have these themes, there's going to be a couple years at a time. If you do hold it for 10 years, there's going to be a couple years at a time where, you know, it's going down, right? It just is. That's just the nature of the market. And you just could have completely avoided this, but now all of a sudden it's in the top 10 in the last 3 months. It's really surged a lot off the bottom. Could just be junk buying. I'll just kind of keep an eye on it until something like that happens. But if you go back, I actually have a Pakistan chart. Let me show you. Okay. This was a chart I created a long time ago, right? This is the Karachi Stock Exchange in Pakistan. So, and this just kind of makes my Golden Cross Death Cross point. So if you look at it right here, you can go all the way back, and I can't believe Stock Charts has this data, but you can go all the way back from 2000 to 2006. You can see the Golden Cross happen right here. You're in. You got a little whipsaw right here. 656% on that move in 6-7 years, right? You get back in. Then there's a 19% move, right? You get back in right here. You had to sell right here when the cross happened, right? So you probably might have had a little bit of loss right here, but you know the trend completely trumped it, and then you get out again, right? You get the death cross, and you completely avoid that 2008, 2009, and then you get back in, another 58% move, you know, a little trading range for a year. Another 173% move, get back in, another trading range, 53%, and now you can see it's been in a death cross since here, although you had some whipsaw right here. It moved up and then it moved back down. But this is just a long-term chart to show you that if you have something you really like, I think this is the way to go. Just, if it's an ETF. So this is a chart I created a couple years ago, actually, and I haven't even revisited it. But now that Pakistan is starting to come back on the map, at least on my screeners, I found this. So I hope this was helpful. Let me know if you have any questions.